I'm Michael Fox, and this is the Prospector News Podcast. And I have joining me a regular guest, David Erfle of the Junior Mining Junky. Welcome back, David.
Thanks a lot, Mike. Thanks again for having me on.
Yeah, absolutely. Well, you and I were both in Toronto last week for the busy PDAC, and it was a busy event. I think we waved at each other casually across the crowded room without having much opportunity to catch up and talk at the show. But while we were there, gold took off like a scalded cat.
Yeah, it's funny. It's always crazy there, like you said. You don't have a lot of time to just to catch up with people when you do see them. But yeah, I mean, the last 2 years we've had the gold price start rising into PDAC as opposed to the other way around. Usually we have that PDAC curse going on, but the last few years, last year and this year, the gold price rose into PDAC for I think for the same reason, regional banking fears. I mean, last year at around the time of PDAC, we had Silicon Valley Bank ending up going into receivership right after PDAC, but those fears were brought to the attention of the market as we were attending PDAC. And this year, the same thing happened the Friday before PDAC happened to a bank, to New York City Bank. I mean, New York Community Bank, and where the CEO came out. A new CEO was appointed at the last minute and announced that there was a lot more losses than they expected. And then later they needed a $1 billion cash infusion, and a lot of people don't think that's going to be enough. In the meantime, the FDIC's bank term lending facility closed on this Monday, so there's no more bailing out banks under that facility. And we got an FOMC meeting coming up here next week. All the Fed heads are on blackout this week, so they can't talk down interest rates, or talk up interest rates, or whatever they plan on doing. But it hasn't seemed to matter to the gold price because it's breaking out, despite the fact that I don't think, and it certainly appears that the Fed's not gonna lower rates anytime soon until they're forced to. And I mean until they're forced to, meaning that something breaks, and that something that might break will be another bank going down, which very well could be NYCB. It could go into FDIC receivership. That's a very real possibility. So I think that's a big reason why the gold price is breaking out, along with the fact that the next move in interest rates will be lower. They can't afford to raise them anymore, and I think the market understands this. And also, you've got China's central bank continues to buy gold. China's citizens continue to buy gold, while Western investors continue to sell gold out of, with ETF funds flows continuing to go lower. So it's basically the East keeping up the gold price, and then I think the regional banking fears coming to light again, which has helped break it out.
Yeah, I look at that, and I know the Fed really does not want to lower interest rates from, everything reading between the lines that they've been saying. Can this New York Community Savings, can it hold on until after the Fed meeting so they get one more under their belt before they have a crisis?
Yeah, that's beyond my pay grade, trying to assume what's gonna happen there. But, the la the last time that, we had, uh, the Federal Reserve come out and, have an emergency meeting and lower interest rates was, right after the pandemic in 2020. And, Jerome Powell had to come out and they had to call an emergency meeting and lower rates to zero. Well, before that, before there was another time when at 2000, remember we had the dot-com bubble burst, which is similar to what's going on in AI right now with an AI bubble. And after the dot-com bubble burst, and a lot of people smarter than me are saying that the AI bubble is on the verge of bursting, and it may have even started to burst last Friday when we had Nvidia lose 240 billion of its market cap in one trading session, which, by the way, is pretty close to what the entire market cap of the mining sector is. So, you know, when the dot-com bubble burst in 2000, after that took place, we had, Alan Greenspan come out, on the very first trading day of 2001 and announce an emergency, Fed meeting where they cut rates 50 basis points. And that started the gold bull market from about $250 an ounce to 10 years later to $1,900 an ounce where it ended up, and that was the spark that triggered the gold rise. So, you know, I'm just waiting for something like that to happen eventually because I really don't think the Fed really has the impetus to lower rates until they have to.
No, the mantra's been higher for longer, and it's, with the exception of the Christmas hiccup where Jerome Powell kind of went off the reservation there for a little bit, and they walked that back pretty quick. That has been the mantra from the Fed for quite a while. So gold is known to be a harbinger for the economy, and when it takes off like this, it's like a scream in the dark. And I wonder, what is your take? What do you think gold is actually trying to tell us about the overall economy?
Wow, well, it's flashing danger signals. You know, we've got a very heated presidential election coming up, where basically it looks like whoever wins, the other side is not going to accept it, and unfortunately, it could turn violent. And we've also got an economy that is addicted to low interest rates, and now that the interest rates have risen, all this debt that needs to be repriced is putting a weight on the regional banks here. And this is an economy that cannot really function properly in a high interest rate environment. The Fed knows this, and this is just a powder keg waiting to happen as far as the market having a correction here. And how that what's going to spark that correction, I mean, I don't know. And at what point will it start to finally correct? I don't know that either. But all I see is I see the opportunity in the mining sector. This is the greatest opportunity that I've ever seen. I've been in the sector in over 20 years now, and every other time that the gold stocks have had this huge clean out where we had capitulation events with everybody selling their gold stocks, it was always when the gold price was threatening to break down from a key level, not threatening to break out from a key level. And that key level is $2,000. I mean, gold's been trying to break out to over $2,000 for over 13 years. And now it finally has, and it's got this beautiful cup and handle pattern. And once we get a monthly close above 2,100, that is the technical signal for momentum traders to come in and give the all clear. And and all I see is just quality depressed gold stocks wherever I look. So this is just an incredible opportunity here. And as far as the stock market is concerned, I see the risk to the downside, and as far as gold stocks are concerned, I see the risk to the upside.
Yeah, it's you live in California. I used to live in Vancouver up in Canada, and the gold is like the animals. They always knew when that earthquake was coming before we've ever felt it.
Right,
So
exactly.
that's kind of the way I look at the markets right now. I think gold is telling us that there's a major tectonic shift about to happen.
Yeah, absolutely. And but unfortunately, while the gold price is breaking out, so is Bitcoin, and so are AI stocks. So there's no impetus to hedge any of this yet. I mean, all these speculative stocks, these speculative vehicles continue to go so much higher. I mean, the Nvidia, the as far as the valuation of the stock is concerned, is just out of this world. I mean, I think it went up over $1 trillion in market cap in just a few months, which is unheard of. So, once this stock market, especially the AI stocks and the Bitcoin frenzy, starts to roll over, people are going to start looking for hedges and looking for safety, and they're going to finally find a gold price that is breaking out. And the reasons it is breaking out early, like you said, it's usually a barometer for something about that it's about to take place. When that something does take place, that's when Western investors will finally get into gold, and that's what we've needed Western investment to get into gold before the stocks finally take off.
Yeah, no, definitely. And I look at Nvidia as a possible precursor because it was driven and fueled by the shortage of microchips. And right across all the commodities, there are shortages. And they've been screaming for quite a while. And it's just a matter of the market to realize it and pick it up and run. And as you pointed out, it went down in one day about the entire market cap of our entire industry.
Yeah,
So
that's
it,
that's crazy. That's how tiny our industry is, but also shows you the opportunity, right? That it doesn't take very many people to wake up to the fact that gold stocks are trading at the lowest price in history in relation to the gold price and the opportunity there. And all it takes is just a few big money players to see that opportunity to spark some of these stocks, and then people waiting on the sidelines, waiting to see that spark, they'll start getting in because there's a lot of money on the sidelines, I think, and just watching this sector and waiting for the signal to get in.
Yeah. So I was going to ask you about silver next, but we started to talk about the gold stocks and how undervalued they are. So let's go down that road. What's it going to take for these stocks to saddle up and get ready to go for a ride and a run? What do you see the impetus for the gravy to spill down onto their taters?
Yeah, well, I see, silver is once it gets going, it always moves a lot higher than the gold price percentage wise. So we know that's down the road, but $26 is the number I'm looking at on the silver price. There's really stiff resistance there, and once we have a close above 26, then I think it can move to 30 pretty quickly, and that's the longer term resistance is $30. But you'll start to see that, I think, when the gold stocks move more, because if you just all you have to do is take a look at a chart of GDX and GDXJ, the gold miner ETFs, and a chart of silver for the past 4 years, and they look exactly the same. Right? I mean, like I said, you've seen Chinese investors and central banks led by the Chinese central bank buying gold, which has kept the gold price elevated. But unfortunately, they don't buy silver or silver stocks. So they've noticeably lagged over the past 4 years. And to a point to where, like I said, where there's a mean reversion right now that I think has started recently when the HUI to gold ratio sparked down to 0.09, which is where it spiked in late 2015, early 2016. And and then once it spiked there, we had a mean reversion begin, but it only lasted for about 6 months because it was coming off just a 6 month base in the GDX and GDXJ after a brutal 4 year bear market. Well, now we've had another brutal 4 year bear market in gold stocks, but the bottom is 14 months, which is a lot stronger. So with the base being stronger, I see the mean reversion take going a lot higher. Also, because this gold breakout is an historic one, right? It's to all-time highs after trying to break above strong resistance for at 2000 for 13 years. So I mean, if you just take a look at a log chart of the gold price from when the secular bull market started at 250, the gold price has a long way to go. I mean, there was another cup and handle pattern in the gold price below 500 that also lasted about 13 years. And once the gold price finally had a monthly close above 500, the gold price took off. It went up 360% in 6 years. So if we have any kind of a move, any close, anything close to that, these gold stocks are going to do really, really well over the next several years, especially from these levels.
Yeah, and how long a period was that when gold made that move off the 500?
That was in 6 years. So you had the gold price break out above 200 to above 500 in 2005, and then by 2011 it it hit 1925.
Yeah. So as you know, and we've kind of talked about it, there was always this PDAC curse where we have some seasonality creep back into these commodities, and it usually happens, a couple weeks after PDAC closes towards the end of the month. Are we going to see the same pattern again, and you'll see a bit of a reversion coming at the end of the month, or are the fundamentals different this time that's going to keep this moving?
Well, the curse was reversed last year because of regional banking fears, so I see it happening again this year. We had the same thing last year where gold wasn't doing very well going into PDAC, and then after PDAC, we had a nice move in gold stocks, and that's already started now. So I see it continuing.
Okay. I've always likened, I remember very vividly having a conversation with Rick Rule back in around 2015. So, it's 5, 7 years ago now, if whether or not we count the pandemic years or not. And he always said that when this takes its next leg up, it's likely going to be a stealth rally for several months before anybody notices it. And, if what you're seeing in the charts is true, we could see a rally happen here in what's normally the quiet summer months when no one's paying attention, and everyone comes back to the computer screens in the fall and go, "Oh, wow, look what gold did while we were sitting on the beach with cocktails in hand."
Yeah, I mean, it wouldn't shock me because, sentiment got so black bearish into February. I mean, that was the worst I'd seen it since late 2015, and, I just didn't think there was anybody left to sell, and like I said, the gold stocks had been creating a 14-month base, and the GDX and GDXJ had got down to the bottom of that base, and we had 3 consecutive bullish hammers from, GDX and GDXJ lowest levels in those 13 months going into March, and we've had this huge move up since. So, it sure looks and smells like a bottom to me. Of course, we need to see some follow through, and we need to see that follow through with strong volume above levels in the GDX at 32.33 and in the GDXJ at 39.40. We see strong closes above those levels with some good volume, then I think that's gonna solidify this 14-month bottom. And as one of my favorite technicians, Luis Yamada, is famous for saying, the bigger the base, the higher in space. And as far as the mean reversion is concerned with these gold stocks, they've got a lot of catching up to do with the gold price, even if by some fantastic reason the gold price doesn't take off until to its cup and handle measured target of 2,500. The gold stocks still have a lot of catching up to do, even if the gold price doesn't even move that far.
Yeah, most definitely. So, in review, we had a couple of weeks where both the daily and the weekly high on the Fridays set new highs. And the next step to the market, based on your calculations and everything, was a monthly close over 2,100. And we've got 2 weeks to find out if that's going to be a reality.
Right, 2 weeks and a Fed meeting
Two
before
weeks in
we
a
find
Fed
out if that's
meeting.
going to happen or not.
I don't know if that's a thing that we're looking forward to, or just a common occurrence. Yeah, I got 2 weeks in a Fed meeting. Uh, if people want to follow your work and your charts, etc., how would they do so?
They could find me at juniorminerjunkie with a y.com, and also at Kitco, where I have a weekly column come out every Friday.
I appreciate you joining me, and we'll circle back after April Fool's Day to see if we got fooled again, or if we do get that close above 2,100. So look forward to talking to you next.
Me too, Mike. Thanks a lot for having me on.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.